For Your Money is brought to you by NelsonCorp Wealth Management.
It's now time for Your Money. We're joined by David Nelson, CEO of NelsonCorp Wealth Management. Welcome back, David.
Thank you very much.
So you've talked previously about slowing growth and the potential for a recession. What does that really mean for the stock market from here?
Well, yeah, you're exactly right. The signs that growth is slowing, certainly in the U.S. and globally even more so. Investors need to keep in mind as far as that looking at the recession talk, that the recession data is always looking in the rearview mirror. So when we talk about GDP and labor and we look at corporate earnings, it's all rearview mirror type stuff, where the stock market, we talk about the stock market, it's always looking forward. So I brought along a chart today. Again, I think a little good news as far as for folks to look at. Not saying today or tomorrow that this is going to take place, but some interesting data here as far as on this chart. Got a lot of squiggly lines. What it's looking at is bottoms after recessions. And so the dark blue line as far as in the middle is essentially looking at the average of all of the events that have taken place, the rallies, and it averages about 40%. That's kind of interesting. That's a 1-year average, by the way. And when we look at a 5-year as far as average, what we're seeing there is about 100% return on a 5-year basis, which is pretty shocking as far as numbers to most people.
So what are you telling investors about how they should be thinking about this?
We're certainly not calling for a bottom, nor are we telling people as far as that cash everything in and run for the hills. It goes back to the common sense approach that we talk about a lot, the weight of the evidence. And the weight of the evidence today is basically saying don't make any radical moves.
All right, David, some good information there. Thanks for joining us.